The equity markets pulled off their all-time highs. The S&P no different. Obviously, you can't continue to set new all-time highs every day, and so a pullback, while it is just a downtick, it doesn't change the overall macro outlook. Stocks still look very strong, both technically and I think fundamentally at this point. There isn't a whole lot that's going to push the stock market down. It can be pulled around, and we found today that there is one thorn in the side of the equity markets, and that is the U.S.-China trade negotiations, which, while we're not in firm negotiations right now, they're continuing to talk back and forth. And today, with the risk of going over his skis, the president talked about imposing more tariffs on China, and that was very negative to the equity market, pulled us off those highs. Certainly not a major decline. It wasn't like we saw a 10% correction or anything like that, and I doubt we'll see something like that. But at this point, any downticks are watched very closely, not only because the market's been going up for so long, but also for buying opportunities, something that we've seen few and far between over the last year or so. So right now, equity markets, while off their highs, still remain very bullish. None of that's changed despite what we got in the headlines today. And if you look at the VIX index, the VIX index was up again. So that's 2 consecutive days for the VIX index to be higher. Like the bond market, there is some concern about, I don't think it's a Fed move. I don't think it's an economic move. I think this is all about China. It's all about how the U.S. is going to resolve this issue. It's been going on for so long, and right now comes to the headline that, well, after all this back and forth talk at the G20 and you talk about what the president has said and done, now to be talking about more tariffs has some concern to the market. That's very negative for the equity markets and would certainly bring with it a pullback. And I think that's why the VIX index, while it's still very low, stubbornly so, it was up in now 2 days in a row, which is rare. We haven't seen too many uptick double days in a long time in the VIX index. It's been hovering near the recent lows with a 12 handle, so not showing any fear, but again, maybe starting to show some concern, raising a few eyebrows, if you will. And lastly, we have earnings coming out. Yeah, we've had those bank earnings, and they usually set the table for Wall Street. And while the bank earnings were positive, it's the forward guidance that's going to bring some concern. And I think at this point, lower rates and more rate cuts coming from the Fed is going to be a concern for the banks going forward. Likewise, I think that when you add in now China and you add in how tariffs could be imposed or might be imposed, or the threat of them being imposed adds to the market, we could see some more downside here in the equity markets than maybe we thought previously. Rate cuts are very positive for the equity market. Obviously, it feeds the beast, and that's what's really been feeding the equity markets since really the early part of first quarter of this year. And I think ultimately, if the Fed comes out at the end of the month and says we're going to do a one and done, it's very bearish for the equity markets. If they say they're going to continue to watch and wait and be patient and use some of that tricky Fed language, then I think equities are fine. They're going to continue to go higher, because what the Fed doesn't want to do is tell you that they're going to be aggressively cutting rates. But if they don't tell you that they're not going to be cutting rates, I think it's almost implied that they will. So at this point, the equity markets seem very bullish despite the modest pullback. A Fed cut at the end of the month with forward guidance of more to come is likely to happen, and that will continue to feed equities higher. So at this point, I don't look at anything that's happening with the U.S. and China as major, but we have to put it back on the radar, as it will continue to be a thorn in the side of the equity markets and the Fed in the days and months to come.